All right, go ahead, Billy.
So strangles in general, and I know, the covered strangles we're doing, say on MES or whatever. Um, on the short put, you're saying don't worry about getting put because then you can just wheel it, roll it, whatever.
So you mean on the covered strangle, right?
On a covered strangle, yeah,
Okay.
yeah.
Okay.
So what about strangles in general? Let's say I have a strangle on XYZ and it starts to sink and my short gets threatened. I mean, management. Are we closing them? Is it safe to just let it get put and then you can sell out the money and be done,
You
move on?
could
Or
you could do that if you'd like, and if you're able to hold the extra buying power you need. So if you're doing a strangle and then you sell, 0.05 delta or so, and let's say it actually touches that strike, you're gonna need a lot more buying power than when you started the trade.
right?
If you are already okay in your buying power and you know what you're going to do to manage it before you actually did the trade, that's fine. Um, what you could do is just wait until it touches in the money. So it touches your strike price on the put side, and then maybe roll it down and out if you could, like another month out or so to see if it recovers back. And you wouldn't
Yeah.
like, get a sign right away. It's a little bit more buying power efficient that way. If you're okay,
Well,
letting it get a sign, you could, and then try to wheel it out, sell a call against it. But again, what's your buying power? That's probably the biggest thing to think
that's
about.
really the main thing. Yeah. So I've got one on the Aussie dollar right now that the put's getting kind of, it's not, it's real. I think I'm at my short's 0.61 and it's like at 0.62 right now.
How
So
many do
it's super close, but I have until February.
Yeah, that's the hard part because you have a long time before it gets there.
Yeah.
So if it keeps tumbling way below your short, then it's going to need a lot of buying power. So just be aware of that. You could be okay with holding on for now and then knowing maybe I would set like a certain stop loss. Like if you're at negative a certain amount of dollars, you're just going to
Yeah.
get out of the trade no matter what. And otherwise, you could try to hold it and wheel it out.
Yeah, there's another guy on here. I forget his name that we do some talking on that Aussie dollar, and when he gets to 300, he's out. And I've looked at that before. I'm like at 327, so I'm a wait.
What is that a different group? It's not me, right?
No, no, it's here.
I did Aussie dollar.
Mhm.
I was already out of that though. I guess you were stayed in it.
Yeah, I'm still in it.
Oh, okay. Yeah, I got out of it a while ago, I think. But
What trading it at all?
pretty much.
Yeah.
Um, when did I even do that? It was a long time ago.
No, you didn't do it. It was when I did on my own.
Oh, okay. Yeah, that's what I was
Yeah,
wondering.
it was when I did on my own. But there was another guy in here who was talking about it as well,
Okay.
and but it wasn't. Yeah, it wasn't one of your trades.
Yeah, it's interesting to see when Trump comes in if the US dollar will be strong or not. There's a chance short term that it might get even stronger, which would make the Aussie dollar even weaker, but it's hard to know. I mean, there's a lot of economic reasons about why a US dollar could be up or down, and the Aussie dollar too. But they go together. So when one goes up, like if the US dollar is stronger, the Aussie will be worse. Just be aware of that. And
Okay. Yeah. Yeah. It's
you
good
could
to know.
also you could also look at the US dollar price to see where it's at, especially when the election comes. But when the inauguration comes, then it might be pretty volatile there. Just be aware of it and just watch it carefully that day.
Gotcha.
I think otherwise it should be okay. I think it's just you here. Any other questions you have?
Yeah. So on your new 2025 strategies, is that like a separate fund that you're totally doing? And have you totally gotten away from the naked puts and the standard, the
Yeah.
safeguard and the MES and
So I'm doing a $25,000 account on Tasty for stocks, and then I'm still doing the futures. It's going to be on Thinkorswim. So I have a smaller account there. I'm going to do about $10,000 on futures only. So like MES and safeguards and whatnot.
okay. I mean, but so you've gotten away from some of the things you were doing last year totally?
A little bit. I'm not gonna have the funds to do a lot of the oil, golds. I'll still give recommendations on things to look at, but I'm not gonna take those. So if you have the buying power for it, you could look into doing some. I'll probably post those once a month or so. And then for Aussie dollar, the other commodities, again, I'll still look for possible setups there, but I'm not going to take those.
Gotcha. Yeah, I never did the oils or the gold. Just too too much
Pretty,
capital intensive for me.
yeah. So yeah, the stock-based one I think could at least help out with Volmageddon events where, the volatility just killed the futures in August. So with the individual stocks, it could still hurt, obviously, if volatility shot up, but I'm willing to get a sign on these in the covered strangles. And I'm keeping my buying power pretty low. So I'm okay getting the extra shares if I get exercise on my naked put. So I think it's going to be a more efficient way to do things, at least for me. The futures could still work fine. Just got to be careful when those volatility events shoot up because it's going to be hard to manage, just like you saw. I don't know.
Yeah, like the
Were you in much
112.
in August when the volatility shot up? Like
Say
future,
again?
were you in a lot of futures in early August when the volatility shot up?
Yeah, and I was on vacation and I was kind of watching it, but it kind of helped me relax and I didn't really do anything and it turned out okay.
That was lucky. A little, there was definitely some luck involved because
I mean, yeah, well, sure.
if you looked
It's
at your account that Sunday evening or Monday morning, it would have been absolutely blown. Like, I don't know if you happened to look then, but if you're in a good amount of futures then, it would have really hurt.
No, I don't do a whole lot. I mean, I was doing one or two lots on the naked puts every Sunday for a while.
Okay.
And then I had just a couple of 112s on.
Okay. Probably not horrible. The 112s would have been hurt really bad though,
Yeah.
especially with MES. Because those, the bid ask spread was so wild and it was hard to even get out of the trades. There was like no market at that time.
Hmm.
But yeah. Have you done any of the covered strangles yet?
I did SoFi yesterday.
So
Yeah.
far? Okay. It's looking pretty good. The market's down a bit today. I don't know how SoFi's doing yet. Gotta look. Um, let's see.
Let's see, SoFi. I'm
Are you-
down $42.
Yeah, the whole market's down 1.5%. So that's why it's down a little bit. Um, my SoFi is actually flat right now. I don't know when you got in or not.
Got in a day after you. Got in yesterday.
Because you bought in a little higher. Um, you still
Probably, yeah.
sold, you still sold the 14.5 and the 18?
Yep.
Okay. So yeah, there's nothing to be concerned about on that. I would just wait and see what
Yeah.
happens in 21 days. So that's what my main goal is, to do these covered strangles where I'm perfectly fine with whatever happens anyway. I'm not going to manage these before. Unless there's like a really good profit on the puts, maybe I'll close the put, but usually I'm just going to just let it go.
Yeah. I don't like to close things if I don't have
Yeah.
to.
These will be a little bit more like set and forget. I'm not really forgetting it. I'm still looking, but
Sure.
I'm okay waiting until expiration and then managing at that point.
So what's your thought process on these? Well, hello.
Oh, all right.
Where am
Your,
I? Oh,
your mic is
okay.
off.
What's your thought process on the Theta Pros when you're doing five lots and only getting like 6 cents? I mean, I don't think that's worth it.
Probably not. I mean, it's 6% on your money because it's a one width. You only need $100 to do the spread, and you're making $6 off it. So you're getting 6% in a week.
Well,
There's
that's true.
there's no commissions on Robinhood anyway. So it is a legit 6%. You are risking, five lots, you're risking $500 minus about $30 that you're taking in. So you're risking about $470 to make 30, which doesn't sound good on the main like return profile there. But you could always roll them if it touches the short put. You could try to roll out and wait a few weeks to see if it recovers, and then you might still be okay. Um,
Yeah.
I'm only doing a few of those. Like it's not going to be a ton, so I'll consider one widths. The 2.5 width on the one I did today wasn't really worth it when I was looking. That's why I did a one. Let me see. I did the target one width. Yeah, I mean, you could make it a bigger width if you want. So the target I did a 131, 130. You could still sell the 131 and then buy like a 129 or 126 even and do a five width on it if you want. You'll take in more premium than the $6, but you're using 500 per one contract.
I got you.
Hey,
All right. Well, I think
iPhone's
I'm gonna roll since it's just
okay.
us.
New person just joined, but
Yeah, I just wanted to hear your trade plan, so just wanted to
ah,
jump on.
hi. What's your name? I don't know.
Uh, Eric Jones.
Oh, okay. Hi, Eric. It's hard to
Hey.
remember everybody.
Yeah.
All right. So yeah, I'm gonna go over my trade plan now, Billy. If you want to stay around, you could. If not, yeah. Let me share my screen real quick. Eric, did you happen to see the YouTube video I made yesterday from my trading plan there?
I haven't had a chance, no.
Okay, so I'll just pretty much go over what I just talked about there. Let me just open it up. So $25,000 will be only stock based. I'm gonna look to use about $15,000 of the 25. It's really 27 grand. I'm gonna keep a little buffer there. Up to 15,000 on covered strangles on individual stocks. That's with the margin used. So buying power from selling a naked put, buying power from buying 100 shares. That total needs to be around 15,000 or up to it. Poor man covered calls. I'll do around 4 grand. I'm in SoFi, sorry, not SoFi, XOXL, the 3x leveraged semiconductors. And that cost me about $1,700. So I have room to do one more of those if I want. The put credit spread to PMCC and TQQQ. That was the one where every week I'm gonna sell the put credit spread on TQQQ. If it gets to the sold put, then I'm gonna turn it into the poor man covered call. You need $500 per contract to do this. If I do two contracts, it's $1,000. If I turn it into a poor man covered call, it's going to be more. So let me show you what I mean by that. Let me hide stuff first. All right, so I'm still working on some of the mechanics on this when I have to convert it. So TQQ, it's down quite a bit today. I'm going to look 7 days out. I'm going to try to get around $15 in premium for a five width. So that's 3% in a week. Usually it's around 0.06, 0.07 delta around here. But with the VIX higher, maybe I could go even lower. I'll try around 0.06 delta, sell the 71, buy the 66. And that's paying around 12. I could shift it to 72, 67. And that pays me the 15. I'm only going to do one, I think. Eh, I'll see if I get 16 or not. Yeah, I'm fine with 15 if it goes. It might be 14. 14's still okay. I'll just take the 14 just to make it quick here. Um, Still 14. I'll just let it sit there. Now in this one, if it goes down to 72 from 82.9 anytime next week, I'm going to convert it into a poor man covered call. The issue is you need more than $500 to use it. So I'm going to typically look around 80 to 170 days. If I want to buy near the at the money, so right now the at the money is around 82 or so, 83. It's costing me about $1,300 to buy one. I'm going to make a little less because I'm going to sell a weekly um, call against it. So I'm going to need at least like $1,200 or so to do that at the money. If I go more in the money, which I prefer, just because if you're more in the money, your delta's higher. I'm going to probably look to buy around a 75 or so. And that's $1,700, $1,800 right here. So it's a bit high to use. If you go less DTE, if you go around 84 DTE, it's going to cost you a little less, but then you have less time for it to actually work in your favor. 84 DTE will be $1,400. If I sell an at the money call for a week out at 83 right now, it's taking 250. So you're still looking at around 1,100, $1,200. So just be aware of that when you need to convert it. You're going to need more buying power to do that. What I'm thinking is making sure that the deltas are higher on the leap than the sold call. So again, zero point 0.7 at least delta. If I'm buying a zero point 0.7 delta on the leap and then selling a zero point 0.5 delta on the at the money, if TKQ goes up a dollar, you're making about 70 cents on the leap and losing $50, 50 cents on the weekly. So you're only gaining about 20, which is still fine. The issue is if it moves up a lot, then your weekly sold delta will go up very quickly and your bought leap won't go up necessarily as fast. And then at that point, your sold could actually be a higher delta than your bought. When that happens, then you're going to start losing money if it keeps going up because the gamma on the 7 DTE is much higher. So that means your delta will go up higher. And then at that point, you probably have to get out of the trade. Does that all make sense? Um, See, I'm still thinking about how to do that. What I'm thinking about in the trading plan is keeping those where the bot leap delta's higher than the sold. If the deltas ever get equal, I'll probably just get out of the trade at that point. It won't necessarily be a big gain, but it may not even be enough of a gain than the loss that I'm doing when I convert it. So when I convert the PCS to the PMCC, you're losing some money on that. So just be aware of that. Most of the time, the PCS will just work and then we make our money. I might have to go to 73 for next week. Let's see. 73 is 0.08 delta is a little high. Maybe the 72.5. I'll look at the 72.5 and see if it gets 15 or not. 72 will be 67.5. They don't have a 67.5. So I'll just do the 73. With the down day today, maybe there's a chance where it won't continue to drop a lot. I mean, it could, but there's a chance that it might mean revert. I'll just try to get this for around 17 or 18. 17's fine. I'll leave it for now. All right, so that's the PCS to PMCC. Broken Wing Butterfly and SPX. When we're over the EMAs, right now we're not because the market's dropping a lot. It actually was yesterday, and I technically should have put it on, but I just forgot. So I guess that was a good thing that I didn't put it on since we're down a lot today. But if you look at it, we were above the EMAs right here yesterday. I should have taken it. But when we're above the EMAs again, it's going to say sell put on the Theta Pro. I'm going to sell 21 DTE. I don't know if you've done these already or not, but I look around 21 DTE, around 0.27, 0.28 delta on the bot. I'm going to go 15 with, so 58.25, I'm going to sell. And then I double this, so 30 away from there. 30, sorry, 57.95 is 30. And then I'm just going to sell two of the middle one. So it looked like this. You usually get at least $200 in premium off it per contract. And then I look to get $100. So I'm gonna, whatever I get filled at, I'm gonna make a GTC order for $100 less to try to close it off for $100 gain. I already bought SVOL, that's the volatility one. Right now, SVOL could be worth buying more, by the way. So we should be down a bit on SVOL because volatility went up. So we're down 2% on it. You could get in on SVOL at a little bit of a lower price. SVOL and VIX are inversely related in general. So when VIX spikes up, like VIX right now is up 19%, SVOL is down. So it could be a decent time to buy SVOL when the price is lower, get a lower entry cost. And then when VIX goes down, SVOL typically goes up. Pays a really good dividend. It's about 12, 13% a year right now. I think it's more. I think it paid around $26 per 100 shares. And the stock's at around 20. So it's a little more than 1% in a month. And then I'm also buying Bill. I bought 100 shares. I actually was looking into it this morning. I could probably buy a little bit more and still be okay. That will pay about 30 something dollars a month. So that's a 27,000 plan. Covered strangles. Eric, did you do any of these yet that I've been doing recently?
No, no.
All right, so for covered strangles, I made a list yesterday on a lot of different possible stocks that you could do this with. So if you look over here from yesterday, this is a list that I was researching the last few hours last night. Some of these have more growth. They're going to be a little riskier. Their earnings are not as good in general. But I was looking for stocks that have decent earnings the last few years, decent premium, and decent income essentially. And then also making sure there's a good amount of open interest and volume because a lot of stocks I was looking at have so little volume, it's not even worth it. These have a little bit more growth. The premiums will be higher. If you want to be a little safer, these are the strong dividends in general. A lot of these are dividend aristocrats. They've been paying dividend growth for 25 years or more. They're not going to pay as much in premium though, but if you're okay just collecting your dividend, collecting a smaller premium, these could be a little bit of a safer play. And then these don't pay a dividend, but they're similar to these. They're low in implied volatility. They're probably not going to move very dramatically. In terms of covered strangles, what I look at is, let's say that there's a stock that I like. I did SoFi recently. It's down a bit today, but it was up yesterday. I'm pretty much flat on the actual stock price. Well, let's say I was a little bit bullish today, and I wanted to do a covered strangle. You typically want to do this on a short-term bullish. So if you look at, say, Theta Pro, SoFi will probably show sell call right now. It's still a sell put, even with the down day. So SoFi is still okay to use, I think, today. You see a sell put recently. Cover strangle is a bullish strategy. So what you're going to do is buy 100 shares. And then with that, you're going to sell a call. This will be a covered call because you already own 100 shares of stock. And then sell a put against it at a lower price than the current price. You have to be okay with getting an extra 100 shares of stock at the lower cost than what I initially bought it at. So you're essentially doing like a half position to start it, being okay to get another 100 shares later on. And I'm perfectly fine with whatever happens on this trade. If it stays between these options, I just collect my premiums, lower my cost basis, do it again. If it goes above the covered call, that's the max profit. I would make whatever I bought my shares at, the difference of where I bought my shares at to where my covered call is. So here it's around $200 from 16 to 18. And I kept the premium I collected on the call, and I collected my premium on the put that expired worthless. If it goes below the naked put, I still at least collected premium on the covered call. I collected premium on the put, And then I'm going to have another 100 shares at a lower cost than what I bought my shares at. So I'm lowering my cost basis and my average on my shares. Does that make sense?
Yeah, that makes sense.
Okay. I'm going kind of quick because I think you understand most of this already. Um, so yeah, I'm looking for stocks that will get at least 4% a month on the premium that I'm taking in. So if I look at SoFi on Tasty Trade, it's usually about 50% of whatever the stock price is the amount of margin you need. So if I bought 100 shares of SoFi right now at $16 a share, you only need about $800, so 50%. Then I'm going to look to sell a covered call to make at least 4% of my money. If I took in $39, you do 39 divided by 800 for the cost of the shares. And that's going to be, sorry, that's going to be decent, 4.8% on your money. And also, if it goes up, you might get capital gains too. You can make an extra $200 if it goes above 18. If you want to get more premium, you could sell even closer to at the money. Sell the 17, you get 65 over 800, and that's 8% on your money in less than a month. Looking at 21 days here. You also might make $100 or so in capital gains. So when you get closer to at the money on your covered call, you'll take in more premium, but you have lower possible capital gains because you're closer to the price. So if you're very bullish on a stock, you probably want to go a little further out of the money because you might get more capital gains. If you're not as bullish on a stock, you probably want to sell closer at the money to get more premium. That makes
Makes
sense?
sense.
Any
Yep.
questions so far on that?
No.
For the put side, I'm going to look for, again, at least 4% on your money. On the naked puts, it doesn't use up much buying power. If I sell like a 14.5 put right now, it's only $212 in buying power, and you can take in $38. That's way over 4%. So 38 over 212, we're looking at 17, 18% on your money if it doesn't get assigned. Now, just be aware if you get assigned on this, if it goes below 14.5, you're going to need more buying power than $212. You'll typically need 50%. So you'll need about $725 or so. Just be aware of that when you're doing it. That's why when you're doing these trades, you want to make sure you have a good amount of buying power. I'm looking to use up to 50% of my available buying power, and I'm not counting BIL because I could always sell the BIL if I need to. So BIL is about 10% buying power. So I'm okay if we're using up to around 60% or so. 50% for all my trades, 10% for bill. And then if it gets, if everything's dropping a lot, I could consider selling bill first before anything else.
Sounds
Um,
good.
on my spreadsheet, go to ebook strategy channel. I put the new spreadsheet for 2025 here. So this is where I'm recording everything for the new year. I already posted the ones from Covered Strangles for this year because they expire in 2025 anyway. I'm writing down where I buy my shares at. I'm writing down all the premiums I collect. And then the cost basis is just the entry price minus all the premiums. So right now for Iron, for instance, my cost basis is 7.95. If it got down that low, I would pretty much be at break even at that point. The main goal is to collect premiums, get around 4% on your margin. If I'm using 50% margin and getting 4% on it, then it means I'm really getting around 2% on my total account because it's halved. And I'm okay getting 2% a month on these trades. I might get more if my covered calls get assigned, or sorry, exercise. That means that I gain capital gains on it as well. I'm also writing down how many shares I'm willing to take in. Iron's a smaller share price. I could take in up to 400 shares. Most of these will be 200, maybe 300 shares. And I put it on the top here. Silver is really low buying power, 400. So you can still take pretty much any of these if you want to today. The market is down a bit, so you might be able to buy the shares at a lower cost than I bought them at. And you can consider doing the similar strike prices. They're still all pretty reasonable. Like nothing's at the naked puts yet or anything. And that's really about it for the plan. Have any general questions for me or questions on anything?
Not right now. On your spreadsheet, I noticed the typo, but that's a
Oh, where was it? Do you
you
remember?
put father instead of farther. But
Ah,
that's yeah, that's no big deal.
where was
But
on the spreadsheet?
yeah,
Or
yeah. Flip back to where we just were.
sorry, I gotta find it. Let me share my screen.
It's not a big deal.
I
I just
know,
want
but
to let I
I'm
want to let you know that
OCD. You
I'm
know I'm
looking.
OCD about it.
I'm paying attention.
Okay,
And
wait, wait. Sorry,
it
I'm
was right by the DTE. It says father from DT or something like that.
farther. Yeah. Was it here?
Slide all the way left. All the way. Up and
Oh,
line
here.
three. Line three. Yep.
Ah. All right. Hey, I'm not perfect.
Hey, I'm not either, but I just want to let you know I'm looking.
That was a good
I'm,
catch.
I'm
Like
listening and looking.
you were finding stuff I wasn't even talking about here. But okay. But that works. Thank you.
Sir, thank you, Lance.
No problem. Any other questions you have or thoughts or whatever?
No, I'm just thankful to be part of the group. Thankful for your presence and you're doing this.
All right, appreciate it. If you know anyone else that would be interested in day traders, let them know. If they sign up, I'll send you $200 as thanks. All right.
Cool. Thank you, Lance. I hope you
All
have
right.
a good New Year's.
You too. Have a good New Year's. Happy holidays.
Bye.
All right, bye.